Yeah, exactly.
I wonder how many success stories of guys who have risked like yourself and others who have put risk on the line and then they ended up making it. How many stories of guys who put risk on the line and they've burned for it or they haven't made it?
Yeah.
Right?
Yeah.
We don't really weigh that in the situation of calling people the 1% or whatever, but there's a lot of people who have attempted that and then they also haven't made it, just to give perspective of what the risk you're putting on. Okay, I'm just going to go back to the video.
He's putting some of his money in assets, like buying and selling properties or shares in companies. This becomes like a second and sometimes bigger source of income for him. When that investment banker sells those assets, he only pays taxes on 50% of the profits he makes. Now, he's not paying 50% in taxes. It means that if he makes $1 million from selling properties or stocks, taxes only apply to $500,000 worth of it. So when all the math is done, that nurse is paying about 29% in taxes on her full $70,000 salary. But the investment banker, he's only paying taxes on half of the money he makes from selling assets.
Is he comparing apples and oranges there?
No, completely different.
Yeah.
It's a completely different scenario.
He compared income tax to because her salary income tax versus the investment tax.
Yeah.
So apples and oranges.
And so this is the problem that this is my beef with those in academia trying to neutralize the tax differences between income, dividends, and capital gains. Again, it comes down to the level of risk. And so that investment banker, if they're taking $1 million, assuming they are making that, and they're putting it into, let's say, these poor people who own rental properties are getting a really bad rap here. We need more houses.
Yeah.
And either rentals or people buying and building houses, we need to incentivize them.
Yeah.
So more investment bankers that are building houses for more Canadians to either rent them out or sell, the better it is for everybody, right? And if they pay a little bit less tax, it's much better that that investment banker or that individual does it than if the government does it. Because we've seen the misuse of government funds. We've seen the Arrive Canada app. We've seen just the TMX pipeline, how egregious that was in regards to the mismanagement of the building out of that pipeline.
Yeah.
And so you're much better to have private individuals provide that funding and take the capital risk than the government. And I think that's just a difference in a huge difference in philosophy between this existing government and other governments and the mindset of Canadians is that everything is got to be government controlled, right? And everyone has to apply it from that standpoint. And we've seen the results of government control. Yeah. It's just you lose a lot. The capital is not being optimized.
Well, we can learn from history, throughout history, many examples of what happens. You mentioned about guys who own rental homes get a bad rap. Well, I was one of them until last year. My wife and I, we have a rental home. We sold it last year, pretty much 1 year ago now. We had it for 5 years. We were every year because of the scenario of property tax in Calgary, other things, insurance going up, all that. So for the last 2.5 years, we were running a negative income on it, like negative $100. We weren't making money off it, but probably sold maybe a year too early on it in terms of how much the rentals jumped. But the thing is, just to give perspective, is that I'm one of those guys that, let's say this was done a year or 2 years ago, is that middle class guy. I still have to watch the money I spend every month with my wife and I and our family. Like, we're not just flippantly spending and everything's fine. No, we have to budget and figure out what we're doing. We're trying to get ahead, trying to be smart with our money. Is that I'm just a normal dude. This capital gains wouldn't have, I'm not the 1%, would have affected me in terms of having to pay more on the house and the capital gains that I sold, because I've owned it for 5 or 6 years.
But you're just trying to get ahead.
And that's the point. I'm saying I'm not a super rich Bay Street 800 grand a year guy. I'm your normal dude that's got a kid and wants more kids and want to build a family, wants to build wealth. But this type of thing is now hurting it. And the profit that I made on that home, profit's the wrong word, but the money that I took out of that home, walk away with whatever, $140,000 or so, taxes, have to put aside for cap gains. So that's aside. But that's money that I could put towards my current mortgage, and I still have a mortgage, and it wouldn't clear my mortgage. You know what I mean? So I'm saying it's just a normal guy like everyone else.
You're not making 800 grand a year, $1 million a year. No. You're trying to grow yourself out of middle class and create opportunities, some capital.
And this is slowing me down.
And now all of a sudden that just like, why would you even do that? Interest rates are high. Why would you take on the debt and the risk? Now you got to pay more tax on the exit.